The U.S. government claims to hold over 8,000 tons of gold. But what if I told you no one has actually seen that gold in decades? Allegedly, it's stored in high-security vaults, the most well-known being the Fort Knox Bullion Depository in Kentucky, which reportedly holds about 4,580 tons, nearly half the nation's gold. The rest is kept at the U.S. Mint and the Federal Reserve Bank of New York. Altogether, America's gold reserves have hovered around 8,100 tons for years with only minimal changes. Officially, the gold is valued at something called the book value, a fixed rate of $42.22 per ounce, totaling about $11 billion. But here's the catch. That number is far below gold's current market price. If valued at today's rates, this gold would be worth hundreds of billions. Despite this, the valuation hasn't been updated since the 1970s. You'd think the government would reappraise it or at least audit it regularly, right? Apparently not. And recently, there's been a surge in gold shipments from London to New York, raising eyebrows and questions. So what would we really find if we were to inspect those vaults today? Why won't the government just conduct a full audit and put the speculation to rest? And what would it mean for everyday Americans if the gold wasn't actually there? This is one of the most fascinating financial mysteries around, and today I want to take you through it. Gold holds a legendary place in America's financial history, and rumors have long circulated that the U.S. might not possess the gold it claims. But how did the U.S. even amass over 8,000 tons of gold to begin with? During the Great Depression in 1933, President Franklin D. Roosevelt ended the domestic gold standard and issued Executive Order 6102, which required citizens to surrender their gold coins in bullion to the government in return for paper money. This move was controversial, but resulted in a massive influx of gold to the U.S. Treasury. To store all that gold, the Fort Knox Depository was constructed in 1936. By 1937, trains were transporting vast quantities of confiscated gold into the newly built vaults. As tensions grew ahead of World War II, even more gold flowed in, this time from other nations seeking a safe place for their reserves. By 1941, Fort Knox alone held more than 20,000 metric tons of gold. At its peak, the U.S. controlled nearly 23% of the world's official gold reserves, an unprecedented concentration of wealth driven by trade surpluses and wartime alliances. Under the Bretton Woods Agreement of 1944, the U.S. dollar was pegged to gold at $35 an ounce, and other global currencies were linked to the dollar. America's gold hoard gave other nations confidence in the dollar. But by the 1950s and 60s, this began to change. The U.S. started running trade deficits and spending heavily overseas, prompting foreign governments to exchange their dollars for gold, a practice allowed under Bretton Woods. Gold began flowing out of U.S. vaults and reserves dropped. By 1971, America's gold holdings had shrunk back to today's levels. That year, President Richard Nixon ended the dollar's convertibility into gold, effectively pulling the plug on Bretton Woods and transitioning to a fiat currency system. So if the dollar is no longer backed by gold, why does the U.S. still have so much of it? Technically, the Federal Reserve doesn't own any gold. Since 1934, all gold belongs to the U.S. Treasury, though the Fed holds a gold certificate worth about $11 billion on its balance sheet. This certificate is symbolic. It reflects the total gold held by the Treasury, but not its real market value. Even though the gold is marked at $42.22 per ounce on paper, its actual market price is much higher. But the Treasury doesn't adjust, or mark to market, the value. So why hold on to it? Some argue that gold, though no longer backing the dollar directly, still provides implicit value and signals financial stability. Interestingly, if the gold were revalued at current market prices, the Treasury could issue more gold certificates, effectively boosting its balance sheet. This could help reduce national debt or stimulate the economy. So why hasn't this been done? That's where theories come in. Some people believe the gold might not be there at all. There's heavy secrecy around Fort Knox. The public isn't allowed to tour it, which leads some to believe it might be empty or missing gold. In the 1960s and 70s, rumors claimed President Lyndon B. Johnson secretly shipped U.S. gold to London. Others suggest the gold was swapped or loaned out. Some theories even claim the gold is counterfeit, perhaps bars made of tungsten, which is nearly identical in density to gold. A 2009 report claimed China received fake gold bars, sparking further suspicion, even though the report was never verified. Congressman Ron Paul once questioned whether Fort Knox gold was real or gold-plated fakes. So why doesn't the government just perform a full audit and end the speculation? Officials say audits happen, but a complete and public audit hasn't occurred. The last widely cited audit dates back to the 1950s, and even then, it only spot-checked a fraction of the gold. In 1974, following public pressure, the Treasury staged a media tour of Fort Knox for 100 reporters and lawmakers, but it wasn't an audit. No tests or thorough checks were done. From 1975 to 1981, there were more systematic inspections, with audits verifying about 80% of the gold by weight, but only 21% of the bars by serial number. After 1981, those audits ceased. Today, the Treasury and Mint claim that regular internal reviews occur, but no comprehensive audit has been publicly released. In 2017, Treasury Secretary Steven Mnuchin visited Fort Knox with Senator Mitch McConnell and others, marking the first such visit by a Treasury official since 1948. He commented that the gold was safe and sound, but again, that was no formal audit. Recently, the topic resurfaced due to reports that major banks like JP Morgan and HSBC were flying thousands of gold bars from London to New York. Some saw this as evidence the U.S. was out of gold, but the real reason is financial strategy, a practice called arbitrage. Gold prices in New York are slightly higher than in London, and banks are capitalizing on this price difference by shipping gold and selling it at a profit. JP Morgan, for example, reportedly moved over $4 billion in gold to close futures contracts and minimize losses. It's not proof of a cover-up, just banks using the gold market to make money. Still, skepticism remains. Even Elon Musk has tweeted about live streaming Fort Knox. So why won't the government allow a full public audit? Economists argue there's no incentive to lie. The risk would outweigh the benefits. But others say secrecy breeds doubt. After all, we're being asked to trust that a vast treasure is secure without ever seeing it or verifying it ourselves. A public independent audit could settle the matter, but it hasn't happened. If it turned out the gold was missing, the economic fallout could be devastating. The dollar could collapse, inflation could spike, and there could be calls to return to gold-backed currencies. It could become a major global crisis. For now, there's no hard evidence that the gold is gone, and it probably is there. But unless we see a true audit, we can't be completely certain. That uncertainty is a problem in itself. Maybe one day someone like Elon Musk will give us a real look, but would we even know what we're seeing? Until then, it's still a mystery.